Well, there's a variety of different strategies within the policies that we use to capture different types of gains and depending on the market conditions. So there's different strategies we have that will focus on certain market conditions, allow us to get maximum returns. The most important thing we do, though, in the policy is we have a built-in floor. And I think the floor, it can either be 0%, 1%, 2%. So that means if the market crashes, you have $100,000 in the policy, market goes down 20%, you're not going to lose any money because that floor is going to protect you. And when I think looking forward with all the volatility that we have and, again, all the different things that could make the economy go up or down or, asset bubbles that are happening in different segments of the market, having a floor is one of the most common sense things that we can do. And in fact, if we look back at what the impact in these life insurance policies of what a floor has done over the last 10 years to protect us from losses, you have $100,000 growing to about $180,000 over the last 10 years through 2010, in these policies because that floor has protected people from losses. So when you're actually getting gains, they're actually real gains. And that's something that a lot of people don't realize is when they're recovering or you see some big returns in 2009 through 2010 when the market kind of rebounded there, a lot of what people thought were gains, they're actually recovering from losses. Those aren't really gains. But in the life policies, we had clients that got really incredible returns in the 50 and 60% range in that 12-month period, and those were actual gains because they didn't have to recover from those losses. And I know those gains sound pretty extravagant to a lot of people. Most people have never gotten those types of gains, and they're a permanent gain. When they go into the policy, they're locked in, they become permanent. They can't be taken away in future years due to market downturns. But that's just simple math. It's a simple strategy that we have that allows us to capture those types of market rebounds. It's easier to kind of see those on some of the charts and graphs that I have in the videos and stuff. I have a lot of different videos on the website, and we have some new ones that we can email out. And so you can kind of start getting some education on just the common sense aspect of having a floor built in. And the upside, we can talk about that as we get into it, but I would say call and get some of the free videos, and that would be a good first step.